Welcome. This is Foreign Currencies with Scott. I'm your host, Scott. So today's subject is going to be foreign currency pairs. We're going to discuss why everything is done in pairs. Before we get into that though, I just want to say to this new channel that every video is going to be short, 5 minutes or less. This will allow you to take a single concept, try to get your hands around it, and understand it, and then you can be done for the day. So we'll keep them short. We'll try to keep them as focused as possible. And then what we'll do, so that you're not hankering for more content, is we'll release a new video every day. So in a future video here, in the next few, I will announce what time of day and what time zone the new video will come out each day. But you will have a short lesson every single day to learn about foreign currencies and trading them, okay? We're going to cover a lot of things. We're introducing you to foreign currencies. We're going to give you some background on the foreign currency market, about understanding how it works, and then trading in it and making money in it. All right, so having said all that, let's get into today's lesson, which is foreign currencies always work in pairs. So let's take an example from the stock market. And this is one area where trading foreign currencies is significantly different from the stock market. In the stock market, let's say you like Apple and you want Apple to go up, or you think it's going to go up. So you buy it and it goes up and you make money and you sell it and you're done and you walk away with your money. Now, it is also possible to sell Apple stock, but that's a bit more of a difficult concept to understand. How could I sell something that I don't own? So it is possible, and a lot of people do it, but many, many more people, of course, don't do it. And one reason they don't do it is because they don't understand it. And that is really good investment advice right there. If you don't understand something, don't do it. Okay, you might get lucky, but odds are you won't. You don't understand it, you're going to get burned. Okay, all right. Now with foreign currencies, in one of our first videos, we said, you like the US dollar, you're patriotic, you think it's going to go up, but that's not sufficient. What is it going to go up against? Is it going to go up relative to the British pound? Is it going to go up relative to the euro, or perhaps the Japanese yen? Let's say that you firmly believe that the US dollar is going to go up versus the Japanese yen. So you pick the pair that is involved in that is on the trading market, and that is USD-JPY, which stands for US dollar, Japanese yen, as you might imagine. So this pair reflects the relationship between the US dollar and the Japanese yen. How many yen does it take to equal the value of $1 US? So if this pair is going up, that means that the US dollar is getting stronger versus the Japanese yen. And if this pair is going down, it means the Japanese yen is getting stronger versus the US dollar. Now, in the foreign currency market, this is still called buying and selling the pair, but you don't really have to try to understand a concept of selling something you don't own. You just think that the relationship between those two is going to go in a direction where the yen is getting stronger or where the dollar is getting stronger. All right, so there's going to be a lot to look at in terms of understanding how you enter that position and how you get in. But the first thing, of course, is to understand that everything works in pairs, and it's about the relative value between those two currencies. Okay, so that is today's lesson. We're going to get in under 5 minutes as we hoped for, and we will see you again here next time on Foreign Currencies with Scott. Bye-bye.